The Bitcoin halving is perhaps one of the most talked about crypto events of 2020. Analysts and pundits have whipped up a frenzy of estimations bordering on speculation. So, what the hell is this holy halving and what the heck does it mean for Bitcoin? My name is Guy, and in this video I will answer just that. I will also take a look at what we can learn from past halvings, dive into the stock to flow model, let you know the halving price predictions of crypto's top thought leaders, explain why this halving could be different, and much, much more. All this is going to help answer the question, is the Bitcoin halving going to bring out this little guy? Now, before I get started, there are a few things I need to tell you. My videos are for educational purposes only and should not be viewed as investment advice. Also, if you're new to the channel, then click that subscribe button and hit the little bell to get notified about all my latest videos on YouTube. Finally, make sure you stick around till the end of the video for my personal take and prediction on what the Bitcoin halving will mean for price. Now, with all that out of the way, let's jump right in. To explain what the Bitcoin halving is, I'll have to quickly go over Bitcoin mining. In a nutshell, miners are responsible for updating Bitcoin's public ledger of transactions, known as the blockchain. To do this, miners guess a random number called a hash that solves an equation created by the Bitcoin protocol. When a miner solves the equation, the latest batch of transactions is then added to the Bitcoin blockchain as a block, and that miner is automatically given a Bitcoin reward. This is known as a block reward. Blocks of transactions are kept in order according to when the transactions were confirmed. This is basically a chain of blocks, and hence the reason it was called a blockchain. Now, in case you were wondering, Bitcoin miners don't sit around in a room all day trying to guess the answer to an equation. All the guessing is done by brute force computing. In the past, one could mine Bitcoin with a home computer, although today, dedicated mining hardware called ASICs rule the roost. The key thing to know is that the block reward for solving the puzzle to each block is there to incentivize people to dedicate their computing power to maintaining and securing the Bitcoin network. Without the miners, the Bitcoin network simply wouldn't operate. Another key point is that Bitcoin miner rewards don't stay constant forever, and this is because a halving rule is built into Bitcoin's codebase. Put simply, the Bitcoin halving refers to the point in time that Bitcoin miner rewards are cut in half. This happens every 210,000 blocks, or roughly every 4 years. So far in Bitcoin's history, we've gone through 2 halvings. One in November 2012, when the block reward was reduced from 50 Bitcoin per block to 25 Bitcoin. The second halving in July 2016 saw block rewards reduced to 12.5 Bitcoin, and the third is set for May 2020, which will see the block reward halved again to 6.25 Bitcoin. Now, it's worth pointing out that the halving date is not set in stone. This is because it's unknown how long it will take the world's Bitcoin miners to solve the equation for each block. However, the approximate block generation time is roughly every 10 minutes. So now that you know what the Bitcoin halving is, let's explore why it could have an impact on Bitcoin's price. If you're like me and the vast majority of Bitcoiners out there, you won't be a Bitcoin miner. So that begs the question, why should you care about the halving, and why should the halving event impact Bitcoin's price? Well, mining rewards can be viewed as a form of Bitcoin inflation. After all, around 1,800 newly minted Bitcoins are added to the circulating Bitcoin supply per day through miner block rewards. That's an inflation rate of around 3.6% per year, which isn't too far off 2019's global inflation rate of 3.41%. However, after the halving, Bitcoin's inflation will be cut by another 50% and will drop to just 1.8%. This marks the first point in Bitcoin's history that the Bitcoin inflation rate will be lower than the global inflation rate. You can see exactly where we are in Bitcoin's inflation schedule in the chart up here. In theory, a reduction in Bitcoin inflation should be good news for Bitcoin's price. Put simply, Bitcoin's price can be boiled down to net inflows, people buying Bitcoin, and outflows, people selling Bitcoin. The miners play a key role in outflows due to the fact that the vast majority of Bitcoin mining operations are businesses, have salaries and inputs like energy costs to pay for. According to CoinShares Research's December 2019 report, the average mining cost to create a Bitcoin is approximately $6,300. The key thing here is that almost all miner costs are payable in fiat, unless you can pay your energy bill with Bitcoin, which, as of 2020, you can't. This results in miners needing to convert Bitcoin to fiat to pay the bills and keep their mining farms operational. And all that is before we even consider the profit margin necessary to keep the mining farm CEOs in Lamborghinis. Now let's assume that the CoinShares report is correct and the cost to create a Bitcoin really is $6,300, that all the costs of production are payable in fiat, and that all miners are happy keeping all profits in Bitcoin. Then we can calculate the daily miner sell pressure by multiplying the number of Bitcoins created per day with the average cost of Bitcoin production. This gives us over $11 million worth of Bitcoin sell side pressure per day. In other words, miners need to sell over $4 billion worth of Bitcoin per year to cover their production costs. Why does this matter? Well, the basic demand and supply theory is that for the Bitcoin price to stay the same, the amount bought should equal the amount of Bitcoin being sold. Of course, this is holding all other factors constant. The point is that miners, pre-halving, are selling around $11 million worth of Bitcoin per day, and that means that $11 million worth of buyers needs to be found every day for the price to remain the same. After the halving, the number of Bitcoins awarded to miners is slashed to 900 per day, and the miners selling would be cut to just $5.67 million per day. The key issue here, therefore, is if demand for Bitcoin will fall, stay the same, or rise. If we just assume that Bitcoin demand and the cost for miners to produce a Bitcoin stays the same, then this means that the impact of the halving is an additional net inflow of $5.67 million per day into Bitcoin. In other words, that's another $5.67 million in extra buy-side pressure or demand for Bitcoin per day. When I think back to what I learned about demand curves in economics classes back at school, an increase in demand with a constant supply results in an increase in price. I now want to talk about what happened in the past Bitcoin halvings. Although the past doesn't guarantee what may happen in the future, it often rhymes. You can see here that in the first halving on the 28th of November 2012, Bitcoin's price was still below the previous all-time high of $31.50. However, during the 368 days after the halving, a massive bull run took place, with the price increasing 9,200% from just above $12 to nearly $1,200. On the 9th of July 2016, Bitcoin went into its second halving, priced at just above $650. Again, a massive 525-day bull run started, with prices topping out at $19,800. To put that another way, that's about a 3,000% return from the time we entered the halving to the top of the bull market. Seeing that we have only 2 halvings to look back on, we certainly don't have enough data to determine anything statistically significant between Bitcoin's price and the halving event. However, we can observe that every time we've entered a halving, a bull run has been right around the corner. We've also seen that bull market percentage returns have reduced between halvings. Bitcoin has always posted a new all-time high afterwards, and bull cycles seem to be getting longer after halvings. Now, I know you're probably here to find out exactly what price Bitcoin will top out at after the halving and when. That's where the stock-to-flow model could be of some help, so let's now take a dive into that. One of the top reasons people talk about Bitcoin halvings is the stock-to-flow model. Stock-to-flow can be pretty complicated. However, in a nutshell, the stock is the amount of a commodity in existence, and the flow is the amount of the commodity being produced per year. The stock is divided by the flow to create a stock-to-flow ratio. Another important thing to know is that a low flow and a high stock-to-flow ratio essentially means low inflation for the commodity. The cool thing about Bitcoin and Bitcoin halvings is that we know how much Bitcoin will be produced approximately every 10 minutes. The result is that we can calculate the stock-to-flow ratio in the future, which we cannot do with pretty much any other commodity. To make sense of this, let's look at a stock-to-flow comparison chart. Here, gold's stock-to-flow ratio is 62, and that means that it would take 62 years of gold production at current annual production rates to recreate the entire current supply of gold in the world. In short, high stock-to-flow ratios mean a commodity is more scarce, and that's probably why commodities like gold hold such high prices. With Bitcoin, the stock-to-flow ratio is only ever going to increase. So, why all the love for the stock-to-flow model? Well, as News BTC puts it, the Bitcoin price has followed the stock-to-flow with a whopping 99.6% accuracy. If stock-to-flow is to be believed, then Bitcoin prices could hit around $94,000 in May 2021. Not a shabby return at all. So, now you've learned what the stock-to-flow predicts, what are crypto's thought leaders predicting for the Bitcoin price? Digital Asset Research is, unsurprisingly, a crypto research company. Some may say it's an outlandish prediction, but they are calling for $60,000 Bitcoin by May 2020. We then have Kraken CEO Jesse Powell taking to Twitter in mid-2019, calling for $100,000 to $1 million after the halving. Anthony Pompliano, co-founder of Morgan Creek Digital Assets, predicts that there is a 75% chance for a $100,000 Bitcoin by the end of 2021. Finally, we have billionaire investor Tim Draper predicting a $250,000 Bitcoin by 2023. The thing to know is that predictions are simply best guesses, and no one can be sure what the future really holds. However, what is for sure is that some of the smartest people in crypto are pretty bullish on the price of Bitcoin post-halving. Yes, you may be thinking that a $100,000 Bitcoin is pretty outrageous and that the reduction in Bitcoin inflation is not going to have that big an impact. However, another thing for you to be aware of that could play a key role in Bitcoin's post-halving price is that there are actually fewer Bitcoins out there than you think. Currently, Bitcoin has a circulating supply of just over 18.1 million. However, research group Chainalysis estimates that around 4 million Bitcoins have been lost forever. That's essentially over 20% of the current circulating supply that's not available for new money to buy. Or, put another way, there are only around 14.1 million Bitcoin available. That's not very many when you consider that Credit Suisse's Global Wealth Report for 2019 claims that there are around 47 million millionaires in the world. Literally all the world's millionaires couldn't all own a Bitcoin even if they wanted to. So why does this matter for Bitcoin's post-halving price? Well, if you believe that Bitcoin's demand will increase due to the halving event, then that demand would be chasing fewer Bitcoins than people think. Put simply, when you have higher demand chasing a smaller supply, then you typically get a higher price. So if you think that Bitcoin adoption and demand will continue to grow, then halving the current block rewards from 12.5 Bitcoin to 6.75 Bitcoin could really matter. To put that another way, that's 328,500 fewer Bitcoins available on the open market every year. Now, let's take a few moments to discuss why this halving could be different from previous episodes. The truth of the matter is that the landscape for Bitcoin has significantly changed since our previous two halvings. For one thing, we've never gone into a halving having a Bitcoin futures market before, and easily accessible leveraged trading platforms were not available back in 2016 either. This means that the current halving we are going into is the only one in Bitcoin's history where people can easily take short positions, and large positions at that. In the futures markets, we have two key players: the CME Bitcoin futures and Bakkt. With the CME, Bitcoin average daily volume was over 20,000 Bitcoins per day, or in other words, $160 million in daily trade volume if Bitcoin was priced at $8,000. Since Bact's launch, the futures product has steadily grown in popularity, with current daily volumes hitting $40 million. So, combined, we have around $200 million in daily Bitcoin trading volume in the futures markets. Now, of course, physical Bitcoin has about $31.7 billion in reported daily trading volume according to CoinMarketCap. Yet, as many of you know, much of this trading volume may be wash trading or exchanges faking volume to help them acquire new users. The largest Bitcoin leverage trading platform is BitMEX, with $5.1 billion in daily reported volume. On top of that, you have the likes of Bybit posting 218,456 Bitcoin in trade volume per day. If we take an 8K Bitcoin price, that's another $1.75 billion in daily trade volume. Binance's leverage trading platform is also doing nearly $1 billion in daily trade volume too. Of course, there are many other smaller leverage trading platforms out there as well. The point is that even if we somehow believe that all the $31.5 billion worth of volume on CoinMarketCap is actually real, listed futures trading accounts for around $200 million in daily trade volume, and around $8 billion is being done on major leverage trading platforms. We should take these numbers with a pinch of salt. However, what is clear is that a significant amount of Bitcoin trading is being done on futures or leverage trading platforms where traders can easily short the market if they want to. When it comes to this Bitcoin halving being different, we've never had a readily available opportunity to go up to 125 times long or short on Bitcoin or speculate in futures markets before. The jury is still out on whether these new products will help or hinder Bitcoin's price. I'm honestly fascinated to see how things play out here. No video on the halving is complete without even mentioning Hashrate. What you need to know is that Bitcoin Hashrate has recently hit all-time highs of 120 quintillion terahashes per second. In short, a rising hash rate means that more and more miners are mining Bitcoin. Given the halving is on the horizon, this might not be a surprise to you. After all, the small window of time to collect 12.5 Bitcoin block rewards before the halving is closing very fast. The interesting thing is that this increase in hash rate means that mining difficulty adjustments are also increasing. This happens roughly once every 2 weeks. In May 2020, when the halving hits, it's going to be fascinating to see what happens. Basically, one of two things can happen. Bitcoin pumps very hard, or there will be a mass exodus of miners and a rapidly declining hash rate. The key reason for this is that Bitcoin miners will have to sell Bitcoin above a much higher price point post-halving to remain profitable. If you're like CZ, the CEO of Binance, then you'll be encouraged to see even more miners investing in Bitcoin going into the halving. The assumption here is that miners are investing to acquire more Bitcoin today because they expect the price to be significantly higher in the future. All this being said, it is important for me to tell you that the market is pretty divided on the relationship of hash rate and Bitcoin price. Now, I've talked a lot and there is a great deal to digest. However, I'd like to share my final thoughts on the halving with you. I'm cautiously optimistic about the halving and personally believe that the reduction in Bitcoin inflation will positively impact upon the price. Having looked at past halvings, it appears that bull market peaks are taking longer and longer to reach post-halving, and I expect this trend to continue post-halving. What I've got my eye on is the price that Bitcoin sits at the time of the halving. For the first halving, Bitcoin pulled a 92x from the price at the halving to the bull market top. In the second halving, Bitcoin did a 29x. This return multiple is roughly a third of the previous halving. So, for the third halving, I don't believe it would be outrageous to think that the return multiple will be cut by a third again. And I wouldn't be surprised if Bitcoin pulls a 10x from the price we are at during the halving. The interesting thing is that a 9k Bitcoin going into the halving doesn't appear to be ridiculous, and a 10x from there would mean a 90k Bitcoin. What's interesting is that the stock-to-flow model predicts a true value of $94,000 post-halving. So it could turn out that historic price action and the stock-to-flow model converge and point in the same direction as the predictions made by some of crypto's top thought leaders. aka around a $100,000 Bitcoin. Another key thing that I'm looking at is the media hype going into the halving. Indeed, it could well be that the halving is a self-fulfilling prophecy due to the number of people believing in it. I do want to be balanced though. One worry I have is that halving media hype could be a ruse to buy the rumour and sell the news. Or in this case, buy the lead up to the halving and sell the event. I also wonder how the typical Bitcoin holder will react if there are no immediate price increases post-halving. I wonder if this could cause mass disappointment and capitulation. Another thing to consider is if the halving is already priced into Bitcoin's price. After all, Bitcoin was much smaller in previous halvings and everyone seems to know the halving is coming up this time. If so, this would certainly lend support to the idea that we could all be very disappointed with Bitcoin post-halving. Overall, I remain cautiously optimistic for the Bitcoin halving. If I were to guess, I'd say that a new Bitcoin all-time high will either come sooner or take longer than we think. All I know for sure is that this halving is different. We've never gone into a halving with readily accessible futures and leveraged trading platforms before. These could play an exceptionally interesting role in the next market cycle, and they are certainly a factor I'm paying close attention to. So then, what do you think of the Bitcoin halving? What price do you think Bitcoin will hit in the next bull run? I'd love to hear your thoughts in the comments below. Now that's all for today, chaps. I've been Guy, your crypto guy, and it's been a pleasure having you with me. Finally, remember to like this video if you like it and subs if you loved it. I'll be back at you with another video real soon. Thanks for watching my latest video. If you found that insight useful, then you may want to sign up to my weekly newsletter. In it, I release my top market tips, share the coins that I've personally got my eye on, as well as the most insane crypto promotions I can find. If that sounds like something you're interested in, then be sure to drop your email in the sign-up form I've provided below. Till next time, guys.